Please don't allocate all your capital in 1 year. Please don't allocate it to 4-5 companies that you see first, and really take a long-term view.
The decade for India or the century for India is being evident. People are willing to take those risks, those chances.
I always wanted to be in the room when some of these Rehan Yar Khan put 20 lakhs in Ola at a 2 crore valuation. Paytm, the first 4% at almost at 10 lakh rupees. I want to know what led the angel and the founder to that point.
Yes, and you have to be prepared to say, ये तो होना ही है.
Correct.
यार तो होना ही था, loss तो होना ही था.
Because if you want to make financial returns, angel investing probably is not the right place to do it.
Unless you can do between 30 to 100 deals, unless you have that amount of capital to deploy over a certain period of time, you're better off just buying the index fund. Index fund will give you much better returns. Remember, the index goes down in a worst case scenario, let's say in the teens, in the worst case in 20 years. In this, you will lose all your money, it will go to zero.
Arjun, Toshan, welcome to the Barbershop Season 2 version 1.0, which is we go back into the kind of conversations we used to have before. But of course, Toshan, we have you for a limited amount of time. But wanted to kind of just quickly get your feedback on or your thoughts at the end of a tiring day where we have seen multiple companies, different industries, different businesses, and kind of a larger question on angel investing, right? I think a lot of people have asked us who these 76, 80 people are, what is the thesis, how you think about angel investing. We have a lot of people who have come and said, we want to invest in Barbershop. Can we put in 1 lakh rupees, 5 lakh rupees, 10 lakh rupees, some savings are there, etc. So today I wanted to cover over the next 15-20 minutes, about angel investing more than anything else, but overall reflections from the day to start with.
So I think it was a very interesting set of founders that we met, the passion that they have for the business, the kind of problems that they are trying to solve for. And obviously, because these are very early stage companies, there is only so much you can actually know from them. It's very difficult to, it's almost like saying in first standard, can I predict whether the child will go to Harvard or NIT Nagpur, right? You went? But should not go there, others, but that aside, so it's very difficult to predict so early, but the passion, the excitement, the understanding of business, I think today was almost like saying India is the decade for India or the century for India is being evident. People are willing to take those risks, those chances, whatever stage of life they are in, they find their passion and then they go all in.
Yeah. I mean, if I were to go a few years back, I think what struck me the most today was the audacity of the founders.
Yeah.
That there's an audaciousness to chase really big target markets, and they are not scared if a Google is the leader in the market, or an Apple is present in the market, or it is a market with a low gross margin and multiple people competing for it on price, or it's a very difficult market, which is a declining market. I think sadly so, the first one, and I think when the episode comes out, people will see that it's really sad that women in the workforce, what a difficult market that is.
Yeah.
But they are chasing the really difficult problems and trying to solve it, and I think the belief that they can do it as well. I think that's very heartwarming to see.
Yeah.
And from an investor point of view, of course, we like people who can think really big, but we also want them to execute towards that vision. And the group that we formed, we also want to help them get there.
And I to your audacity point, right? And I think sports analogies are amazing. And we heard Harsha Bogle say this, right? Which is earlier, and this is very reflective of where the country and our social fabric is, right? Earlier, Gavaskars and Vishwanaths of the world would say, play along the ground, don't get out, play. You don't go for the 6, go for the 4, take a couple of singles. Even when you saw commentary when you were growing up in the 80s and 90s, was always about protecting your wicket and conserving it, right? Which is how the founders of the 80s and 90s were, because there were so many headwinds, and that's how Infosys was probably born. But you come towards the Sachins and Ganguly and Sehwags of the world, suddenly you say, okay, we're going to be world beaters. We will get to the World Cup final, we'll hit Shoaib Akhtar over third man for 6. And Ganguly started taking on and started hitting 6s, right? And suddenly you started seeing people. Then came the Virat Kohli and Rohit Sharmas of the world, which were like, now 6s are the norm. But today's Surya Kumar Yadav is 6s are not enough. I want to hit a 6 over the wicket keeper to a ball coming at 150 km per hour. And that's what founders today are, in my view, which is hitting 6s is not really exciting enough anymore. I want to change the way the game is played. And you're right, to see someone say, hey, you know what, I don't care about what Google is doing. In fact, they're going to shut it down tomorrow or day after or this week. But we are there. There were 73 people. Now we will disrupt the world from India is spectacular. But does it change the way you guys think about it as from an asset class standpoint? So I remember I putting up a post and I got a lot of disagreement on it. My view was that angel investors should put in money into companies and exit those companies after 1 or 2 rounds. At the Series B, exit. Because if your 10, 15, 20 lakhs has become 60, 70, 80 lakhs or a crore, then now the company doesn't need that 1 crore in assets, right? You take that 1 crore out and then distribute it back into 10 companies at 10 lakhs each. Because then you can keep churning the same capital and touching a lot more founders, which is what as angel investors we typically would value, is to touch more founders, and that money is used more. But I got a lot of feedback on it.
I think there is the issue really is, why do you do angel investing? Why does one, see, if somebody says, to me, angel investing is about impact and touching more number of entities, then that approach makes sense. And you're saying I want to touch more entities, I still have got reasonable return, because 6x in 4 years or 3 years is not a bad outcome by any stretch. But that is one approach. But somebody who says, you know what, I really want to maximize the financial return from angel investing, it's a very different thing, because the angel investor comes in early, takes the maximum risk, and he gets a 6x return.
Yeah.
Whereas somebody who comes in at Series B and waits, if the company succeeds, see, by Series B, you have a general sense of where it's headed. Could get 60x return, so that the risk-return trade-off is slightly different. So, to me, then the complication becomes, why are you doing angel investing?
Correct. My view is that's fair if maybe 10 years back where the proxy between Series B happening and success happening were higher. Today there are a lot more Series B happening where the success may not still be there. So angels should churn out at Series B because you don't know where it's going to go and then kind of back more. So for me it was more a funnel maths, but you're right. I think, but isn't that what angel investing is all about? Like even when we invest together, it's about, hey, let's look at Hyped, or let's look at, Kirti guy is doing this and you want to do this, and it's going to be fun to work with them, and it's more about that than it is about, hey, how much money did you make off that 20 lakh investment?
It depends why you're in the game, right? I agree with what Toshan is saying. So I'll give you an extreme example, right? Someone may be considering that as a career.
Angel investing?
Yeah, no. They may be considering a career in VC and doesn't know how to get into it. And they may be saying that, hey, let me learn and let me warehouse some deals. And I'll get some success. And when I get to Series B, I'll take all those deals and say, that's my capital to start off my fund. And now LPs will come because I built a track record. And there are people who, in the mature markets outside, that's how people get started at some point of time. So that could be one pure way of doing it. One pure way of doing it could be that I have a portfolio and I want to put, let's say, 10% towards companies, and I want to lay some bets, and then I want to sit back for 10 years and wait for a full maturation, and I actually only need 1 or 2 of them to work, and that will give me my full returns, and I'm not interested in any of the other stuff that comes along with it. Maybe LP is a better way to do that, you would say, and maybe it is. The answer is LP may be a better way, but I think people are in it for very, very different reasons. I also have the suspicion, from what I can see, that there are a number of people who are in it from a status point of view. So brag value is a big deal, and from a status point of view, they're like, if this buys me some status, it's okay because it is 0.01% of my wealth into 10 times, and so it's 0.1% of my wealth, and that gives me the status which I cannot buy through everything else that I'm doing in life.
No, actually, it's you just take that point, say, I'm a member of this club, okay, or I have this car. It's like, I'm an angel investor and mentor and advisor to startups. Okay, it's a great way to, because then you are like, whatever. So the why
is very
will determine some of the behaviors of all of it.
Why do you guys do it? I wanted to ask why do you guys angel invest?
See, why I started doing it.
Okay, let me ask. Why do you do it, and then how do you allocate capital from a portfolio standpoint?
So, the portfolio capital allocation from my standpoint is, I'm very happy to lose that money fully. Okay. Don't take that to heart, Shantanu. I know. You made some camera, and you said you are going to lose it. It is my fundamental duty to make sure that you lose it, Toshan, so you can pick your objective. That's not the thing. We have a board member here, and he has a fiduciary responsibility to everybody else.
I must tell you, all the angels were offered exits in 3 years, multiple rounds. Last round, the round before that. Toshan is one of those. extremely believer angels who said, I am not exiting this business. What will I do with the money? So I'm going to stay invested. Which
Actually, I
think
doubled down.
Ah,
I
you doubled
doubled down. I don't know.
So he's clearly the case
Of
which you wrote
staying.
in your post, which you said that he should put it into 10. So I think the question is, why didn't you take out the money and put it in 10 other people?
I think it's excellent point. I think, see, that time when you were offering the exit and so on, what I don't want to do is just because you have the cash, you are like just this thing. So, है ही नहीं डालने के लिए kind of thing. So you don't want to also exit at the, I don't want to exit because I knew this is doing well. And I was not looking at it from a portfolio allocation standpoint. Okay, when anything comes, actually, do I like the founder? Okay, to me, the first and do I like the founder and will I learn from the space? So the recent investment which you had asked me to do in the social media context, it was like I know nothing of social media. Okay, so Twitter, Instagram, these were like new concepts for me. But the only way to understand a space which is exciting is when you have put some money in the thing. So to me, this is also a way about learning. It's the best university tool rather than doing a course on some of these things. Better to know the founder, you can understand and you like the person also. So you like the person. It's a space which is interesting and has potential for monetization. Then you say, why not? Because it's so early stage that there is only so much you can actually get done. So to me, that was the context. Now, of course, when and then there is another issue, right? Which is to say that when I need something, I will exit because till then, just keep investing because long term, India is going to grow. So if somebody who's crossed Series B, Series C and is doing well, the worst thing is to, and I remember this very long time that Warburg Pincus had invested in Bharti at a certain time, and it was like when they exited, it was a phenomenal success story. Temasek came in when Warburg exited, and they waited for the next few years, and Temasek made a lot more money than what Warburg Pincus did. Okay, IRR was very high for but the MOIC and the quantum investments, everything, that was a huge lesson for me, saying just because your IRR is getting it's okay, but your X times multiple and so on then the hardship period is done. So I'm not looking at it as can I do 10 more because I can do 10 more even without that. So I don't need the exit to do the 10 more. If I was looking at it as my total allocation is limited, then I would try to manage within this. I'm not doing it that way. I'm saying it's a perpetual thing. So if I get a good opportunity, I'll figure out a way to get capital for it. As opposed to this capital should only be that way.
So why don't you think like him?
Why don't I think like him?
Yeah, why is your thinking exactly the opposite? That I should take the money and spend
I don't have
it.
unlimited capital like Toshan does. That's the unfortunate there's an entrepreneurship poverty situation where I have limited amount and I'm like, okay, now I have to make the best of this. Which is why for me, in the moment 10 lakhs has touched 50, 60 lakhs and the founder and I have kind of reached a place where they're now independent on their own, running the whole thing. I'm like, now my money doesn't make sense there. I would rather put it into companies like we saw today. Okay, now it will be better used here. So then I kind of turn it out and put it here. I also think that it gives founders an opportunity to give exits to shareholders because angel money feels like debt. Toshan's money to me, even though now it's been 6 years, on paper there have been opportunities to exit. It has become whatever. He invested at 1400, the share price has become 35,000. All of that is fair. But for me, I still feel that this is loan. And I need to return because he's my boss, he's a close friend, and there's a weight to that capital, which I think founders do feel, especially in a friend and family construct.
I think it's an extremely fair point from a founder standpoint, because I have had a couple of others, then Dhyanesh has tried to do the same thing and few others where
Dhyanesh, I exited.
I didn't.
Okay. So at least you're both eating your cooking. That we can say.
Absolutely. But I think he's right that the founders do feel a kind of a pressure to give that exit. And I think to me, so long as the founder is making it very clear that this is your call, okay guys, this इसके आगे कुछ गड़बड़ हो गया तो फिर बाद में मुझे मत बोलना. I think some founders, and especially when they've done it in a friends and family context, I think there is a genuine sense of obligation, which should not be there, by the way. There's one founder where it is down, and whenever I meet him, he says, "I'm still very sorry. I'm still." I'm like, it's okay. It's equity. See, which is why, and my mindset going in is even if it goes, it's okay because it's a very risky thing. the status thing is a challenge because people say, I'm an investor, I'm doing this. But when your money starts going down and it's written off, you need to not forget about the pain, financial pain, but you need to not say, isne mera paisa dubaya. So if you start feeling that way, then angel investing is not for you. Because you will lose friendships. And to me, that is the very deep part is, you should never feel like you will lose friendships because you took a bet on a friend, but you took it knowingly it was equity.
Yeah. And I think it's important to discuss also, because Shantanu, you're doing this, and I think at least till now, the view of angel investing has been quite rosy.
Yeah.
And like if you see, at least before we recorded today, without giving it away, everything was getting funded.
Yeah.
On this show and everything that you've talked, all the founders you've talked about, they all success. Everyone who came in season 1 are like super successful people who kept getting funding. And I think the view is that it will. But I think the truth of the matter is that you have such a high probability of losing your money at the starting. And I like what Toshan said, it is money that I've written off as a starting point. Then anything that comes is a bonus and you can only be happy, right?
Completely agree.
I don't think a lot of people bravely say, yes, of course it is. But then when it comes, as you say, people will say, mera paisa duba diya tumne, right? So I think it's important for people to understand how badly the odds are stacked against you. That if you invest in a super early stage business, pre-seed, with no VC going in, I remember reading a report where in India, the failure rate is 93%.
Yeah.
So 93% of the companies that you would write a check to will be gone.
Yeah.
And then after that, the moment the first, and it may be a chicken and egg story, it may be because of her, it may not be, but the first institutional check when it comes in, then in every subsequent round, the failure rate is between 45 to 55%. Correct. It varies. Yeah. So I don't think there's any exact rocket science that it'll reach C and then C is a real danger point. I think it would depend on the business and the cycle and many different things. But then every time you have half a chance, and half a chance is a pretty good chance versus 93% failure rate. Yeah. The other important thing for people to remember is that you will first lose money before you make money.
Yeah.
So the pain will come first.
Absolutely agree.
And you will lose money. So let's say we start off here. We take 10 companies. We put it into 10 companies.
5 are dead in a year. Yeah.
In a year, half or even more may die a very early death.
Yeah.
Assuming that you are actually super good at making the calls.
Yeah.
You are one of the best. That means if you do 50%, you have quite possibly the best track record, which will beat more than, let's say, 70-80% of the VCs in the country. Even then, you lose half your money within the first 12 to 24 months. And that is extremely painful.
Yeah.
And it will break your confidence if you are a serious angel investor who's not doing it for any other reason than, let's say, financial return. And then it's only over time, and I think as again what Toshan said, is that the act of waiting so long, because the real winner will be the winner at year 8 and year 10, and that's where the real winners will come. Because of course, can you sell it for 3x and 6x and make a quick buck in a few years and show a great percentage IRR? But when you're placing so many bets, the IRR will not matter after some time. It's an absolute return which will make a big difference.
Another thing is also, I think angel investing in our context, right, is salaried money. And if you think about if you're putting anything less than 10 lakhs, it doesn't change anyone's life. And even if 10 of you put 10 lakhs into 1 crore rupees, it's not changing anyone's life. But for you, 10 lakhs is a significant percentage of your income. And that's what I think founders struggle with a little bit. This is, for me, I always felt that this is salaried, hard-earned money. Even if it was senior people, part.
But I think it's the other way around. You should say, if my monthly source of income is assured, okay, so I have a very safe inflows, no? So one thing I'm doing is a very risky, extreme other end.
Yeah.
Because my overall risk return is at a portfolio level is very balanced. I'm not worried as to next month what will happen, because 10 is gone. I agree, it's important, but I'm still going to keep getting a certain steady flow. Here, I can always say, let me be even more equally stable and mutual funds and X and Y. But the other philosophy, and it again depends on your individual investing philosophy, is if inflows are stable, at least take a massive risk on the outflow.
Yeah.
Whereas from an entrepreneur standpoint, if you look at some of the very successful entrepreneurs, over time what happens is they take their risks in business. That's why their personal portfolio becomes more and more fixed
very
income.
Very risk
Because you cannot take risks on the personal front, professional front, everything. you need to balance your risk, and that to me is the fundamental thing, that if your inflows are so stable, at least take some risks here. If your inflows are very up and down, then making angel bet, then you get your portfolio and only X% and Y%. Then you need to be very careful about that allocation.
Who are the best angel investors you guys have met?
There's so many. I mean, it's just very difficult to have a.
Purely from a track record standpoint, or from what founders tell you about them and so on. And what do they do differently, maybe?
No, so to me, for example, folks like Ramesh Mangleshwaran is a very good, because to me a good angel investor is not just about the returns. It's also, as you said, what do founders say about them? Are they helping them? Are they connecting them? Are they mentoring them? And are they just sort of being hands off when? Because beyond a point, an angel investor cannot help the founder, I think. You should just reduce your interference and be a cheerleader. So initial role may be a support, connect, network. Beyond that, you genuinely can, because the founder has outgrown your utility. Neither your capital makes any difference to him. He has become Series B, the institutional investors have come in, they are connecting him, he's become more global. So you need to realize that you are going to be you are reasonably, over time will become more and more minor part of things. So you need to still be helpful, but keep your connect and keep your relationships. But I don't think one can. Now, there are some angels who are phenomenally successful themselves in something else. The founders also like to connect with them. But fundamentally, I think the importance and value add of an angel investor also goes down over time. And those who realize that, I think, are very good.
What about you? Who are the best ones you've seen?
I would say that, I think there's a very high survivorship bias in this. When you see,
with good reason.
Yeah, for a good reason. But if you look at it, a lot of people, even when let's say they say I was an angel in these 3 companies and I spotted them early on in life, and there would be 3 or 4 big names. Rarely will someone have more than 4 or 5. But I think what a lot of people don't see before is see at that point of time is what are all the other things that failed to get to that 4 or 5 set. And I think from whatever I have studied, actually angel investing is a big numbers game.
Yeah.
It is not that I was able to find the company and put it in. Actually, you really don't know. It's like Toshan said, it's like looking at a first standard child and saying this person will go to Harvard or IIT or somewhere else. It's very difficult to figure that out. You can see potential, and I think a big part of angel investing is seeing potential when sometimes even the founders don't see the potential themselves. And but I think it comes with an if and a but. That if the person works hard, if the person pivots, if the person learns a lot, if the person gets venture funding, and if some crazy thing doesn't happen, some blow up doesn't happen, there's so many, and that's why let's say the failure rate in the beginning is so high. Then that person will be a success. So if I see anyone who is successful on a portfolio basis, they almost treat it like, not even like a VC, but the really successful ones treat it like a mutual fund, where no bet when they make it will be more than 3 or 4% of portfolio. I have not seen anyone with this type of success who's not done at least 30 to 40 companies. And people who end up with 4 to 5 winners, and by winners I mean like unicorns or whatever it's called today, sunicorns, have invested in triple-digit number of companies.
I actually wish I was...
And so I think this someone, I don't remember who told me this, but told me that, please don't allocate all your capital in 1 year. Please don't allocate it to 4 or 5 companies that you see first. And really take a long-term view and be clear that if you're doing it, you have to do it many, many times. If not 30, 40 times, at least 100 plus times. And that you'll fail before you succeed. And I think the best angel investors who have returns or who have hit winners follow pretty much this type of a philosophy of a numbers game. And then the qualitative stuff comes after that. That is the founder I like, is there a hypothesis, is a space that I love, how do I work with them, etc., etc. The last thing that comes is access. And I think this is the most underlooked aspect of angel investing, where, whether we like it or not, or whether we say it or not, all 3 of us have a certain amount of privilege which gives us an unfair access to companies, which your standard person who would be buying mutual funds otherwise does not have access to. There are 76 people in your list. Can anyone make it to your list if they write to you, Shantanu?
No.
No. Only certain people, right? So that's an access door which opens.
Yeah.
And actually the best deals circulate amongst a few people. And if it really comes outside that and you're an angel investor listening to this and you are not in a place where you're seeing a lot of deals because you don't know what you don't see and you're not getting into the names, no matter how good it seems, you should really question yourself that is this deal going to be worth it? It may sound great and everything, but the question you should ask is, why aren't all the names running to this? Or why isn't this part of this syndicate or this part of this club, or why hasn't a VC written a check to it, etc., etc. So I think there are many risks, and I think the best angels are also a part of a small group which share deals with each other and pass it on. But no one said that it's a fair game. No one said it's a fully regulated space where, and the real game in this is the opaqueness of the information.
Yeah.
The information is opaque. Even if you get the information, most probably you really don't know how to read it. If you know how to read it, most probably you don't know how to evaluate it. If you know how to evaluate it, most probably you're wrong. Because the company will pivot many times, things will change, lots of things will happen. So the risks are so high that there is no such thing as a sure shot.
Yeah. I think that's a very fair thing. I think just I think for the viewers who wanted to get a quick deep dive into angel investing, and for me, I always wanted to be in the room when some of these Rehan Yar Khan put 20 lakhs in Ola at a 2 crore valuation, or some Paytm, the first 4% at a almost at 10 lakh rupees, or whatever these deals. I want to know what led the angel and the founder to that point where such a massive 1000x, 10,000x, or Alibaba and Masa's on, what led to those relationships where suddenly those multiplier bets could be taken? Because right now I have not had the time or the experience for it to have played out. So hopefully at some point
it will take that much time, Shantanu. To his point, the losses will come early.
Correct.
Nobody wants to publicize their losses.
Correct.
Okay, the survivorship bias is high. I want to show that I'm a great investor and not look at how pathetic my track record is. Because first few years you will be saying my pathetic track record.
Return off.
Then something will happen because the losses will be way front loaded than anything else, and you have to be prepared to say ये तो होना ही है.
Correct.
प्यार तो होना ही था, लॉस तो होना ही था. उसके बाद कभी ना कभी तो
yeah, absolutely. Yeah. I think so. One is it's risky. It's losses first, gratification later, and third is it is money that you should feel comfortable having written off. If something comes back, great, but enjoy it for the experience more than the financial outcome. Because if you want to make financial returns, angel investing probably is not the right place to do it. There are 10 other ways to make more money.
Absolutely.
Angel investing is more for the experience.
Yeah, unless you have access, unless you can do between 30 to 100 deals, unless you have that amount of capital to deploy over a certain period of time, you're better off just buying the index fund.
Yeah, brag value is not enough. I agree with you.
Brag value is not enough. Index fund will give you much better returns. Remember, the index goes down in a worst case scenario, let's say in a 12-month period, the Nifty index would go down in the teens, in the worst case in 20 years. In this, you will lose all your money. It will go to zero. Zero, Zippo. You will get nothing back.
Correct. That's a lot.
There's no chance. Even at 15%, if it goes 15, you can sell it and get back 85% of your money.
Yeah. Amazing. Thank you so much, Arjun, Toshan. Thank you so much.
Thank you.
Thank you so much.